Their revenue more or less doubled between the commencement of coronavirus and by Black Friday 2020. And needless to say, the stock skyrocketed. And briefly in 2021, it became Canada's most valuable company, surpassing the Royal Bank of Canada. So these surfer dudes or snowboarder dudes, they suddenly had overtaken one of the most prestigious and biggest brands in Canada, and they were there, and it was very hard to read up on Shopify at the time and not hear comparisons to the Amazon killer.
This episode of the pod is proudly sponsored by Cadiz Inc. It trades on the NASDAQ under the ticker CDZI. Cadiz is a transformative water resource company that is making a significant impact with its $5 billion in water assets and $173 million in cash. The company is currently constructing a massive water pipeline, the largest in the southwest, which is designed to ensure reliable water access for the region. Cadiz is actively combating the water crisis with game-changing infrastructure projects and strategic partnerships. Under the leadership of visionary CEO Susan Kennedy, who previously served as Chief of Staff to Governor Arnold Schwarzenegger, Cadiz is set to provide innovative solutions and substantial value to both its shareholders and the communities it serves. Always doing your own research before making any investment decisions. The information provided here is for informational purposes only and should not be considered financial advice. How we doing, folks? Myself and Emmet recorded a deep dive on Shopify, which is MyWallSt's best performing pick ever. And we thought, what a better time to release it than right after this week's earnings. We had recorded it before the call, so I'm just going to pop in here and give you a quick update on the numbers to just, I guess, keep this episode a bit more current, if that makes sense. So revenue for Q4 was up 31% year over year to $2.8 billion. Net income doubled year over year to $1.3 billion. A lot of that was from mark-to-market investments. Gross merchandise volume was up 26% to $94 billion and actually crossed the $1 trillion gross merchandise volume milestone in 2024 as well. Operating income came in at $465 million, nearly doubled year over year. Free cash flow was up 37% year over year to $611 million. It ended the quarter with $5.5 billion in cash equivalents, and marketable securities. And for Q1, management expects revenue to continue growing in the mid-20s, operating expenses to be between 41 and 42% of overall revenue, stock-based compensation to come in at $120 million, and free cash flow margin to be in the mid-teens. Look, it's another huge quarter for Shopify. It's actually the 7th consecutive quarter of 25% or greater revenue growth, which is pretty impressive when you consider how much this business has scaled over the last couple of years, especially since the lows of 2022. There's some concerns from analysts about Q1's guidance being a little light. I think it's extreme nitpicking would be a fair summation of that. Also, the stock has more than doubled since August, so it's probably just people keep taking money off the table or looking for an excuse to take money off the table. It's not really going to be a concern for long-term investors. It's an unbelievable quarter and one of many unbelievable quarters for this great business. Just like to give a bit of sense of scale, I suppose, in 2024 as a whole, the company processed nearly $300 billion in total sales on the platform with gross merchandise volume, $9 billion in revenue, $1.1 billion in profits, 875 million unique online shoppers, 200 million users of Shop Pay. It now controls about 12% of the US e-commerce market share. And when we first pitched it, Shopify was doing $15 billion in total sales of gross merchandise volume processed on the platform, $389 million in revenue. It was unprofitable. It was losing about $37 million a year. That was back in 2016, I think September 2016. The stock is up 27-fold since. So this episode goes into first Shopify as a business, but also the benefits of finding a Shopify for your stock investing kind of career, basically. So hopefully that covers everything, and enjoy the rest of the episode. Emmet, how are we getting on?
Good morning, Mike. How are you today?
I'm good. What do you think of the new background?
Yeah, it has a kind of a Japanese vibe. I like the circle. It has maybe like a celestial halo around your head, but it clearly is made of wood, which is, I suppose, ironic considering, we don't think you're woodhead or anything, but
yeah, I'm going for
where are you?
the, when all the interviews were happening on the news and stuff over COVID, and people kept getting the bookshelves with the
That's
impressive
right.
books behind. So
Yeah,
I might
yeah.
start investing in, like, Poor Charlie's Almanac and
Oh yeah.
Stephen Hawking books and stuff like that, make myself look smart.
Oh, it's funny because behind me here is a bookshelf, obviously, and it's been highly curated by my wife. All my favorite books are actually in the presses below it.
All the
And
horrible
they were
histories and Dennis the
and
Menace
I
comics.
exactly, coloring books. But yeah, exactly. So but they're curated, totally curated, and I have to go digging when I'm looking for one of my favorite books, which yeah, anyway, it's all about the aesthetic, Mike.
Yeah. I saw a thing. It was one of these fancy interior designer companies in New York.
Hmm.
And one of the things they would put in to these fancy apartments is a custom bookshelf. And so you could curate the books they would buy for you to make you look smart in
Was
your
that
drawing
RH?
room.
Was that Restoration Hardware or H?
Oh, I couldn't tell you, but I'd
Yeah,
seen it
because
before.
they're a floated company and whatever you want. And it's funny when you go to a big city like New York, you can have your abode look any way you want.
Yeah.
Really, and when you live in a smaller country like Ireland, it's a function of what your local furniture places are selling. But like when you go to New York, you can say whatever it is. I want a bookshelf with an array of books on motorcycle maintenance, and you'll have it within a week. Which is a kind of we're going to have to get you will chip in. We'll get you one. We'll start
I was gonna
a
say,
GoFundMe
I
page.
think it could be a business expense. So yeah, watch
Yeah,
this
why
space
not?
behind me for anyone who's
Well,
watching on YouTube, anyways.
well, since we went fully digital nomadic and decided to work from wherever we please, the office, my Wall Street's office on 5 Marion Row in Dublin, has a library in it with a whole pile of books on it. Mike, go in, get them. They're
Yeah,
yours.
yeah,
The only downside is you have to fly from France.
yeah. I have that bed up copy of Peter Lynch's book still somewhere.
Yeah,
I can't
one,
remember where exactly, but it's fraying
one
at
up
the
on Wall Street.
seams. Yeah.
Yeah, yeah.
Okay.
So what's going on in the world of stocks? What are we going to talk about, Mike?
We're going to talk about one stock in particular today. Now we're talking about it for a few reasons. I think, well, one of the best reasons to talk about is that we picked it in 2017 and it's up about 26-fold since. And the
Mm,
company is Shopify. And
mhm.
for a lot of retail investors out there, they'll be very aware of it. There'll be some very lucky long term owners of it. And it's one of those stocks that I think we talked a little about how to identify 10x stocks or 100x stocks in podcast start of the year, end of last year, maybe. And
Mm.
Shopify is one of those stocks that emulates that journey so well. I think it's kind of been a perfect growth stock for a lot of reasons, mostly because, and what's becoming rarer and rarer these days is that it's done so much of its growth on the public markets. So it started off as a very small company. It's now $150 billion market cap. It's an absolute giant. It's taken on Amazon, all the rest. But all that growth happened within access to public investors, and that's not happening as much anymore. Like private companies are getting bigger and bigger, and they're doing so much of their growth in the private markets, and it's without access to the regular investor. So Shopify is kind of, I don't know, it's a bit of a template. Would that be a fair summation of what we're looking for in a stock, and to find it early and to have all these kind of characteristics?
I think it's a very fair summary. Actually, you've just reminded me back in 2019, my Wall Street ran a couple of seminars here and there and everywhere, and one was in New York City. And the product was called In Person. So we'd kind of run a 1 day intensive boot camp on how to find 10x stocks or 100x stocks. And I was looking through the slides that accompanied that particular event, and it was really nice. We only did one in Manhattan, and it was sold out. It was beautiful. I just really enjoyed that. And when I was looking through the slides that I presented on that day, I said there were basically 5 traits of businesses that the very top line you can look out for. That it was a mosaic of traits that I have observed. So when I looked through all the stocks I've ever bought that have gone up 10x or more, I wanted to identify something common to them all. And the 5 traits that I found at that time and presented were: number one, and none of these would be a surprise because, as you said, we had a conversation about this in a previous podcast. But number one is a founding CEO, and that's generally someone who's highly motivated by something that goes far beyond quarterly results, and the business is the manifestation of their dreams, and they will do whatever it takes for that business to succeed. So number two is they are often first mover in an important industry. Again, something we've touched on in the past, and the strategic advantage, the first mover advantage, is time limited. But being the first or one of the first movers in a new industry really puts you on the front foot. It's kind of like giving a horse a head start, and it really allows a business to exploit a niche and create a new market, preferably with strong consumer appeal. The third trait I said when we were at the in-person event in New York and in Dublin was that a business that's asset light is preferable. And when you picture the giants of today, those giant businesses that we talk about, whether it's Stripe or Meta or Netflix or whatever, like most of them own very, very little hardware. So something that's asset light.
That's changing recently, but yeah.
Well, this is true. No, you're dead right. Dead right. So let's park the NVIDIA conversation. Then the fourth of five traits was revenue growth, and so you want to see revenue from an expanding, retained customer base. And when revenue is growing fast, Wall Street almost never prices it right. So if you were only to look at one number, again, I hear echoes of myself. I'm sure I've said in previous podcasts, revenue growth is the one. And the fifth and final trait, ironically, or at least counterintuitively, that exists in businesses that grow like Shopify, is they have been described as overvalued in the media. And I learned this from David Gardner, co-founder of The Motley Fool. He said, you ideally want to see a business that is being called overvalued. And I have seen this and lived this lesson over and over and over, right back to when I was sitting in San Francisco in 1999 and went into a Starbucks and didn't realize it was a chain and enjoyed the coffee so much, only to ask the person at the counter, are there any more of these coffee shops? And they called someone out at the back to hear my accent, and they got me to say 33 and a third, and where's my Lucky Charms? They're magically delicious. And I was like, right, okay, I'm your performing monkey, but are there any other Starbucks? They thought this was hilarity. So when I absolutely got over myself and my red face went down and I went out and looked and found Starbucks was actually a multiple, I couldn't believe how expensive it was, and I couldn't believe how overvalued the business was, and I passed on it, and that in itself is a story. But when I went deeper at in person, and I'm going to I know I'm drifting here, but I'm going to come right back to Shopify. When I walked through those five traits of businesses and looked for ones that had all of those five traits: founding CEO, first mover in an important industry, asset light, revenue growth, and has been called overvalued in the media, a couple of names jumped out: Netflix, Shopify, Facebook, and believe it or not, Starbucks. And that was in 2019. So, but there's one final, I suppose, attribute that I have a preference for because I've seen it so many times, and that is a brand, a B2C, business to consumer brand. The businesses I isolated at in person went to were Netflix, Costco, Shopify, Chipotle, Facebook, Marvel, Under Armour, Disney, Starbucks, and Buffalo Wild Wings, specifically because those 10 stocks had been my biggest winners, and they were all B2C. And B2C is a kind of, I don't want to call it an unfavorable way of investing, but you don't see as many businesses that are business to consumer, that we can see the brand. But I have a strong leaning towards them because with the data I have and the data I've lived, B2C is strong. But anyway, bring it all back to Shopify. Not every stock we pick has gone up 26-fold, though quite a few have.
I have the stats here in front of me.
Yeah.
So Shopify was first picked by MyWallSt on the 24th of September 2016. I'm going to give a kind of general answer because there might be a fair move between publishing and recording here with this pod, but it's up about 27-fold, give or take, here or there, which is not a bad return for the space of 9 years. Less?
No, it's not. It's not. I mean, that's what we all want. Like, not every stock we've picked has gone up 2,600% odd. though we've had quite a few. We've had more than our fair share. Like in a world with tens of thousands of floated businesses, we've had a lot of stocks that we selected that have gone up 26-fold and more. But in plain speak, that means that if you put 10 grand in and you have a lot of patience, that 10 grand turns into a quarter of a million if you can just sit through the turmoil of the stock market. And I mean, listeners are sick of hearing me say that. That's why I started Horizon, the Horizon portfolio. And Shopify is one of the selections I have on Horizon. And Horizon is a 26 stock portfolio at the moment, but it's only up 100%. It's only up
Only.
doubles. Well, yeah, I mean, I'm very happy. I mean, this time a year ago, Horizon's scoreboard was unmentionable because we were in a rough patch. But I mean, there's 5 other stocks that are up quite a bit more than Shopify in the Horizon portfolio. So we have 6 of the 26 are up over 100%, and a couple of very big winners. But I'm convinced that there's quite a few in there in the red that will be 26 baggers like Shopify, and hopefully 1 or 2 that are going to be 100 baggers. And again, just Shopify is a great reminder that one stock can change your life if you play it right, if you invest the right amount at the right time and stick with it. And
The
like,
temperament is so important there as well. Do you know what I mean? Like
oh yeah,
Shopify fell more than 80% from 2021 highs, where it was kind of the leader in that. I suppose irrational exuberance is a fair summation of that period in the stock market. And Shopify was
yeah.
definitely one of the names that just its valuation got out of control, like so many other stocks.
Yeah, it did, and that's the whole thing. You're hit with daily data if you're a daily stock watcher, and the brain is wired to assimilate what it's seeing right now. I mean, what you see in the moment. But to say, oh yeah, we picked Shopify back in 2016,
Yeah.
like that was 9 years ago, September 2016. 9 years or nearly 9 years. It's a lot of daily pieces of news to ignore, and that's really tough thing to do. And like right now, just about Horizon, and I'll shut up about Horizon because really I am so hell bent on finding the next Shopify's and something bigger like the next Constellation Softwares, which is a Canadian software company that grew 100-fold post IPO over quite a long period of time. Well, I mean, I'm about to buy a stock in Horizon that I'm quietly convinced will be a new Constellation software, but it's really unheard of, more or less. And I'm excited about buying into it now because nobody's looking at it, and that's going to be my next buy in Horizon. Oh, here comes that casual flex, the casual pitch. So if you want to subscribe to Horizon, email my colleague Frank at MyWallSt.com and just mention the Horizon voucher to him. He has a few 8 vouchers left to distribute, so he can kind of run a deal on Horizon if you want to sign up for that. But the one thing I'll say about Horizon, I mean, say Shopify, oh God, I'll get there, Shopify, is that I heard years ago that no fund manager was ever fired for buying Amazon.
Yeah.
Well, I think Shopify is the new Amazon for that idiom.
Yeah, I think so. So let's talk the business. Do you want to give us a bit of the backstory of how it got set up? Because it's quite a unique story.
It is a unique story, and I remember years ago hearing the story, and the character, the CEO, the founder, the co-founder, he's quite a unique kind of guy. He's got a visual brand that you just recognize his silhouette and his style of cap and all the rest. But let's go into the time machine for a minute. In 2004, a young German programmer named Tobias Lütke found himself really frustrated. He had moved to Canada, and along with his friend Scott Lake, they wanted to sell snowboards online. But when they tried to build their store, which was called Snow Devil at the time, they ran into a problem, which was existing e-commerce platforms were really clunky. They were outdated. They were difficult to use. And to quote them directly, everything was just crap. So it was the ecosystem of building a store for yourself just really wasn't there back in 2004. Well, so rather than settling for a bad solution, Lutke did what any determined coder would do. He built his own platform, and he used Ruby on Rails, which some of our more technically adept listeners will recognize. And he created this really sleek, user-friendly system that worked so well that he and his team realized that this software was more valuable than flogging the snowboards online, which is a very limited market, I would expect. So in 2006, they made a really bold decision. They shut down Snow Devil, they launched Shopify, and the whole promise was it was a platform designed to help anyone build and run an online store very easily. And by the way, I will tell you something. Last summer, my son decided he was going to set up a drop shipping thing, which all the kind of teenagers were at that time. And no matter how simple Shopify has made it, I still found it a bit complicated. But anyway, look, that's not about me. It's not.
I was about to say that's not the software issue.
No, that's not. That is a fact. So back when they kicked off, it wasn't an instant success. So rarely are businesses an instant success, and the path to success really is a zigzag. That path to success, no matter what it is in your life, it's a zigzag line, and we all realized that eventually. But Shopify was on one of their zigs and or the zags, and e-commerce was very much in its early days, and it was they were in a position where they had to convince businesses to trust this unproven platform. Like we all know the brand Shopify now, but Lutke and his co-founders, a guy called Daniel, I think it's Wiendand, and Scott Lake, they were just relentless. These three lads were going for it. They knew they were onto something, and they kept improving the platform. They introduced an API, and an app store which allowed developers to build plugins, which made it a little more flexible. And then in 2009, they launched Shopify Payments, which made transactions smoother for merchants. And as the years went by, they just kept improving. A relentless dedication to making what they've got better, and they grew quite quietly and steadily, but they attracted small businesses that really wanted to sell online without the hassle of coding or the complex setup process. So by 2013, they had 120,000 merchants using their platform in one capacity or another, and it was processing billions of dollars in sales. So they knew they were there. Like, I don't want to say they'd made it, but they had made it. But it was still early days. But Shopify wasn't just for small businesses anymore. In 2014, they launched Shopify Plus, which was a premium service for larger brands. 2015, it had grown beyond anyone's expectations. It being Shopify, the whole business had grown and grown and grown, and it just couldn't be called a startup anymore. It was a proper, serious contender in e-commerce, and they listed on the New York Stock Exchange and the Toronto Stock Exchange simultaneously, and raised about $131 million to go and do more stuff. And then it just, as I say, it wasn't a scrappy startup. It was a public company, and it was now in the sights, and it was competing with Amazon and eBay and WooCommerce, and now they were there. They had arrived, and they had the most formidable enemies, if you like, in the competitive space. 2016, they launched Shopify Point of Sale, or POS, which allowed merchants to sell in physical stores.
Yeah.
So suddenly they were shipping the hardware. 2017, they integrated with Amazon, and that's a good one, because apart from making it easier for sellers to list products on the marketplace, it's somewhat I suppose they de-risked the competitive threat of Amazon. They were suddenly a strategic partner, as opposed there was an ecosystem there that they were more aligned with. Now, I'm not saying that they were in plain sailing mode. 2018, they introduced Shopify Capital, which basically lent money to merchants. 2019, they acquired Six River Systems, which was an AI-powered warehouse automation company, which was their move into fulfillment. But I'm pretty sure they pulled out of that. So 2020, did they? Yeah. So they did. I mean, fulfillment is tricky business. I mean, it is really complex. 2020, and then the global shift that I just dread mentioning, but can't seem to not mention on a podcast, COVID, it forced everyone elsewhere, and suddenly businesses needed to go online. So that was an absolute rush towards their business. And unlike an awful lot of businesses that saw a rush to use their platforms, Zoom and the likes, it wasn't What's that? What's that apparition you see in the desert where you see
An oasis.
water? It wasn't. Yeah, it wasn't an oasis. Like it
Oh
was.
no, sorry,
This
I'm
was.
wrong. Well, oasis is the thing, but a mirage.
Yeah, the oasis, a mirage. Thank you. Yes, of
Yes, yes,
course, the
yes.
oasis is what you see. Like it was the real deal. Like they suddenly had they did probably 10 years of growth in 12 months, and the
And
revenue.
what's
Yeah,
interesting about that as well, sorry, I don't want to interrupt, but
yeah,
in my own research, obviously customers flocked to online to buy over this period.
yeah,
But not only
yes,
that, business owners and merchants started up so fast. So I think it was between 2019 and 2023, 5
yeah.
million new businesses started in that time
Whoa.
period. And like
Yes.
for a small medium business, where would you go but Shopify online? You're not big enough to get onto Amazon, and you know eBay isn't
Yeah.
really. eBay is kind of
Yeah.
a hobbyist almost. Shopify
Yes.
is that solution for that type of business.
But it is. I mean, you're on the money there. I mean, their revenue more or less doubled between the commencement of coronavirus and by Black Friday 2020, which is the retail date in the diary, they had doubled their revenue in that time period. And needless to say, the stock skyrocketed. And briefly in 2021, it became Canada's most valuable company, surpassing the Royal Bank of Canada. So these surfer dudes or snowboarder dudes, they suddenly had overtaken one of the most prestigious and biggest brands in Canada, and they were there, and it was very hard to read up on Shopify at the time and not hear comparisons to the Amazon killer, and
Yeah,
the kind of they were hoovering up or vacuuming up the long tail of all the small merchants, while Amazon was in the middle of the bell curve for the giant. It was the giant merchant that had merchants within it, but they really had everything in there. And as you said, 2022 stock price kind of went over a cliff, and they laid off people, and there was a strategic shift which you could see they were growing so fast and doing so many new things like fulfillment. um they kind of had lost the direction, and as you affirmed there, they got rid of their fulfillment business, and they no longer compete with Amazon in logistics, and they just are now a business that focus on empowering merchants with software and AI tools, of course, and payment solutions. And as of today in 2025, it's still, I was going to say, one of the biggest forces in e-commerce. Probably just a triopoly up there, isn't there? There's Stripe, Shopify, and is PayPal even at the races? What do you think?
payments wise,
Yeah.
yeah, yeah. I mean, ShopPay and
Mm,
Stripe are kind of doing two different things, but in general, the not logistics, but the kind of the architecture around there. What Shopify has done so well is kind of provide that all inclusive. So it becomes the middleman between, if a merchant needs Stripe, they'll go through Shopify, or if it needs like other tools like cross border stuff like globally, it'll go through Shopify. And Shopify, that's what it's done so well with its app store, has become the facilitator,
mm,
because that's what a merchant wants. They don't want to have 6 different accounts and manage all these vendors. You just do all in one
yeah.
place, and that's the beauty of Shopify, I think. But that was a great kind of the story so far, basically. But I thought it'd be interesting to go back and read the original thesis we wrote for Shopify. Well, I say
Ah,
we. I
yeah.
haven't. I wasn't at MyWallSt at the time, but MyWall
You
Street.
probably live in New York, a Shopify customer, but that was about it.
So I thought it'd be cool to go back and just see kind of, I suppose, give MyWall Street a pat in the back.
Okay, because I'm cringing because when the we was probably me. Okay, what was written?
Okay, so
Read it. Go.
stock highlights: very sticky business model, high insider ownership, CEO with global ambitions. I think that was a fair summation.
Oh yeah.
I said the word summation like 3 times in this podcast already. Thesis: Shopify is a Canadian company that lets business owners operate their website without having to worry about e-commerce technology. At least that's how they started out. However, in 2015, something very strange happened. Amazon, the undisputed leader in e-commerce, decided to abandon its own web store offering and actually sent its 80,000 customers to Shopify. Today, Shopify is empowering a whole generation of new entrepreneurs to avail of the opportunities of the digital revolution. Shopify now lets anyone with a great idea, and even those with lousy ideas, start a business From web store creation to payments to marketing solutions and even logistics, Shopify is now a one-stop shop for all businesses of all sizes. Perhaps Amazon never realized the tremendous potential of web stores. Perhaps they thought it would never be enough of a revenue generator to make an impact on their rapidly growing third-party merchant business. Whatever the reasoning, that decision back in 2015 has been guffawed by industry analysts to this day. And did Shopify CEO Tobias Luke thank Jeff Bezos and co. for their wonderful gift? Not at all. In fact, he went on the assault. Quote, Amazon is trying to build an empire and Shopify is trying to arm the rebels, he declared. It's always nice to own the leader in the space, but supporting the underdog can be much more rewarding for those able to deal with the highs and the lows that come with it. So I think that was a pretty prescient write-up there. There's a lot of kind of boxes we've seen retrospectively ticked pretty firmly.
Yeah, that Starbucks story I mentioned earlier on about me feeling it was too late to invest in Starbucks in 1999 is one of those lessons that I can now take and transpose onto other businesses, because I dread to use the phrase too big to fail, because we all know that that's the kiss of death. But there are businesses that have a head of steam, that have such momentum and brand presence and have so many customers that their ultimate downfall is very much de-risked. And I really believe that a business should spend money for only two purposes, which is to grow or de-risk. And if every dollar you measure or spend as a founder is either has to be tagged as a de-risking dollar or a growth dollar, you look at Shopify and think they've done a remarkably good job. So I would be of the mind that the business today is analogous to Starbucks in 1999. Now, granted, it is quite a bit bigger than Starbucks was in 1999, but it is the year 2025. And play it forward, we're 26 years ahead of the year 1999. So in the year 2051, 26 years from now, will Shopify still be around? Will it be bigger? And if so, are you willing to invest a little now and hold in the hope that you live to see another 26 years? And I absolutely squarely believe that Shopify has the traits, continues to have the traits of a stock that today will grow 10x. But again, you need as much patience as whoever was out there who bought Shopify when we first recommended it in 2016, because it is an excruciating task to just do nothing. It's a really interesting thing because, again, just bringing it back to the manifestation of my investments over the last 6 years has been Horizon. Anything I've invested in has been published to Horizon, wildcards and regular purchases and all the rest. And when the scorecard was doing very poorly, for various different reasons, I bought growth stocks and launched service in December 2019, which was just prior to a whole bunch of horrible stuff like a SPAC rush and the virus and all the rest. When the scorecard went very red, I took dog's abuse from more people than anyone. The vast majority of people are wonderful. People are by nature good. I love my life, I love my career, and I love running Horizon, but there was a core of people who absolutely went for me, and it was very fatiguing. I never saw that aspect of this job that I've chosen. And I say this not because it's just human nature. People look and see, you've picked stocks and all they do is go red. And I can sit here today and go, yeah, I know, but a whole load of them are up now, double, that's great. But I'm out to build a 10x portfolio, and it takes you need the resolve of a Buddhist monk. You need you need to have some serious amount of resolve. And hats off to anyone who bought Shopify back in 2016, because you were tested over and over and over again. And I just think it's a great business. Like, it is, I wouldn't say indestructible, but it is quite de-risked, despite the fact that many dollars were also spent for growth.
Yeah. Like, if we look at the scale of it now, since its inception, it's processed over $1 trillion in commerce, essentially. Yeah. So gross sales over the platform.
Now we're talking real money. About time.
It's used by merchants in 175 countries. It has 675 million end users, and it's controlling over 10% of the US e-commerce market as it stands. That's a long
Yeah,
way from a snowboard company. And
it certainly is.
I just want to touch on one thing in particular, because I brought this up in that How to Find 10x Stocks podcast, and thought it's one of the most important characteristics for a long-term compounder is not only to have a big total addressable market, but to be able to grow that total addressable market as well. And that's clearly a priority for Shopify's management, which I'd love to see. So when
Mm,
when Shopify was starting out, the micro merchant market probably seemed like Everest, but now it's only one part of a larger machine. So in 2015, with it had its kind of merchant solutions and Shopify payments, it figured it had a TAM of $46 billion, which is huge for 2015. That's what's 150 divided by 25? That's a $5-6 billion business with a TAM of 46. That's a 10x
yeah,
right there.
yeah,
In
yeah.
2023, management said that its TAM is now $849 billion, thanks to more geographies, more products, more different business types. So it's going after enterprises now as well. So I'm gonna a little caveat. I think this could also be an exercise in trying to put down the biggest number possible on paper. We've seen this.
Oh yeah,
We've
we've
seen
had
this
this
a
chat
lot. A
before.
game we love to
Yeah,
hate.
yeah.
But just the fact that for management, expanding its opportunities is such a priority is really good to see, because you see a business that's grown, what we're saying, 26, 27 fold, and you think,
Mm,
oh, maybe the growth is over. But it could just be starting. Do you know what I mean? Like, e-commerce market share right
totally.
now of total global retail is about 20%, or
Mm,
it's expected to reach 20%.
mm,
Um, by 2028, it's going to go as far as 23% is predicted. In the US e-commerce market, I was surprised to hear this is less than the overall, less than the average. It's only about 16%. Now, Amazon
mm,
controls 40% of total sales there. Shopify is 10. You can easily see where it's going to gain market share in the US. But not only that, look at beyond the US and internationally, and even say in nations with less internet access or growing internet access. So Latin America, Southeast Asia, these rapidly growing nations, which are obviously going to come to the fore when it comes to adopting stuff like e-commerce and all the rest. That's a huge long-term opportunity. And
mm.
so, yeah, I just think there's so many green shoots there. We're obviously talking about, it's always kind of had this core of small, medium businesses, but now B2B is becoming a huge aspect of the business and going after these large enterprises. And not only doing that, but say doing it in kind of, I can't remember. They had a much more delicate term than I'm going to say, but doing it online and offline. Like we're talking about their POS solutions and the brick and mortar presence it has now
Mm,
too. Essentially, like, what you can do is run an entire business, not just selling snowboards, but like
mm,
shops, in-person shops, payments, inventory, selling online in any country in the world, doing your analytics, doing your marketing, doing your shipping, all these new AI tools it has. It's
mm.
expanded so much, yes, in terms of customers and in terms of new merchants, but also in terms of the breadth of what the business is. And I think this is such an important aspect to any growth stock, is to be able to expand those opportunities, expand your TAM, and as such, you're going to have success.
Yeah, I mean that's a great point. The TAM figure has been a repeated source of confusion to me in my investing life. But I just like when it's huge, and you open these pitch decks and you see this giant circle, and then the company you're looking at is this tiny little jelly tot in the middle, going, "This is
Yes.
us now, and this is where we're going to go." And generally, the number you just you know what it indicates, a business that has a giant ambition, and you getting forensic on the number is generally I suppose an exercise in futility. But once you see this they have more, you want to see them like analogous to like giggling as they run through a field of money. They can't gather the money up fast. They just can't harvest the money fast enough.
Our,
It's
our,
like,
our
oh,
time our time is we only have two hands to grab all this money. Imagine if we had four.
yeah, exactly. And every time we run to the top of this hill of money, we look over and find a new meadow full of money. We should do a TAM. We should do the My Wall Street TAM,
The
but to have
highlights.
a new take on it.
Yeah.
Every time we run over a hill, we see a new hill. I wish, but anyway, I was looking through things I wrote in the past in Horizon, and back in February 2024, so almost a year ago, I wrote in my buy alert. It said, I'm quoting myself. He said, I wrote, last week I came across this linked interview with Sri Vishwathanan, founder and portfolio manager of SVN Capital. Sri is known for his value investing approach with quality overlay. The recording is a 2-hour masterclass in the intricacies of the stock market, the art of value investing, and finding multi-baggers. And then I wrote two quotes in particular jumped out at me. The first is, the market rewards inactivity, whether it's the result of willful neglect or sheer abdication. And the second quote that I pulled from that YouTube interview was, the power of compounding takes time to exhibit its phenomenal force, and it's always back end heavy. And when you think about those two points that Sri made, that's, they are exhibited in Shopify. The market rewards an activity, whether it's deliberate or not. And the other, the power of compounding takes time, really takes time. And that's why in launching a growth investing service with Horizon, I know the second half is where things start to play
Hmm.
out very well. Yesterday, ARK Invest published a paper, which I haven't read yet. It's just hot off the press, and it's about innovation. They always have nice
The big
papers.
ideas paper. Yeah,
Yeah, the
it's
big
in my
ideas.
inbox. I'm waiting for it.
Yeah, and it's quite funny. Well, I think it's funny when I opened it. Like, we've all heard of the chessboard. Certainly, ARC talks a bit about the chessboard, which I think is a tired anecdote about, if you put a grain of rice on the first square and double it to 2 grains on the second square and 4 on the next, and so on and so forth. The second half of the chessboard is just, obviously exponential growth has literally mathematically happened. And by the time you're on the last square of the chessboard, but by 64 in the 64th square, you've enough rice to cover the earth, or whatever the analogy is. Well, I've recently been diagnosed as someone who needs to wear glasses, but I opened the paper
I
and
wasn't.
it said,
I wasn't sure where that sentence is going to end.
and I opened the paper, and it's called the second half of the chessboard, but I thought it said the second half of the cheese board. I
Yeah.
was like, oh, what's this cheese board? And I was reading on the second half of the cheese board. I don't even know what this is. I'd forgotten about the chessboard, but because my new blurred eyes had decided it was a cheese board, I read on trying to figure out what are they talking about. But anyway, yeah, so they're on Shopify are on the second half, but early second half of their
Yeah.
chessboard.
Yeah. Well,
Um,
what's a great example of this was a couple of weeks ago when we were talking about your Netflix investment. And
yeah,
I know you've had, not on the total position, but on your one original investment, the cost basis was whatever, a, a,
buck 80.
a buck 80, and it went up $180. Like, technically, that was an overnight 100 bagger
Yeah,
on
yeah,
an individual buy, not your entire position, obviously.
yeah, yes, yeah,
And that's the fruits of the labor, I guess,
yeah.
of growth stock picking.
That's
And
the
then it,
fruits of doing nothing. That's
yeah,
the,
but that's what
of
comes.
forgetting the
That's what
fruits of
comes at the
forgetting to
end.
stop. Uh-huh. And 20 something years is a very significant portion of any of our lives. You can buy a stock, as I am about to do with Horizon, that I believe will ultimately be a 50 to 100 bagger, but I'm going in the knowledge it might take 25 years, and also of the knowledge I'm 50 years old, and we've only a limited timeline. But you invest as if you're going to live forever, and I think with that mindset, you forget about. Someone wrote to me recently. I can't remember where it was. I think it was on X, and they asked, "How did you not sell?" It was
Hmm.
one of maybe it was that Netflix story, which I have to admit I'm embarrassed to talk about as often as we do. But hey, it's a story, it's the truth. But they said, "How do you not sell?" And the answer I wrote was, the minute I've always had this disposition, the moment I invest in a share, I cease to believe I own that product, that money. It's like it's gone. It's like I've spent it. It's like a holiday I've already had. I know it's like this kind of theoretical thing. It hasn't crystallized. It has no crystallized value in my mind. I convinced myself repeatedly in the early days when I was in my early 20s that this $100 I've just invested in Under Armour is gone. I'm never going to see it again. It's like I wasted it. And that kind of, it was almost like this mini brain hack that I have carried my entire life. Every month I invest in the stock market. And the minute I buy those shares and I transfer the cash, and I do so, as I said, through Horizon, it's gone. Poof, it's just out of my mind. And I don't own it. And it's even to the point where I think it's going to be there for someone else's pleasure because I'm a long-term investor. Now, I also fully recognize that we have to live a life. And that's a ridiculous, uh, I suppose, hack to sustain forever, because there is no forever. But there are times when you're older, like I hope there's a 20-something-year-old listen to this podcast who goes, yeah, I'm going to do that for a while. At least give it 20 years. If you're 20-something, when you invest, decide it doesn't exist till you're 40-something. And if even one person listens to this, twigs it, and does that, I'm telling you now, by buying an array of quality growth companies, a couple of them will work out, and you won't believe the power of compounding and how Sri, your man, said the compounding takes time to exhibit its phenomenal force, and it's always back end heavy. Always, always, always.
Yeah.
There's barely a stock graph. Every great company had decades in the doldrums. Decades. Oh my goodness. The story of Microsoft is the most bland story when it IPO'd in the 80s. Through for 20 years, it did nothing. One of the greatest wealth creation devices in the history of humankind sat at pennies on the dollar for years and years and years. And there are many people who bought Microsoft astutely and then sold unastutely. So anyway, I'm going into lecture mode. What should we talk? Bring me back, Mike. What will I talk about?
So we're finishing up the Shopify chat. I'm just going to throw some of the kind of general numbers at you, and yeah, we can kind of close out there. I think you've nailed the point of picking Shopify for this kind of deep dive. Was as much to, I suppose, attest to the benefits of growth stock investing. Do you know what I mean? It's almost showing off what can be done, and that's why these stories are so important. Because yes, we're talking about Shopify as a business and should consider investing, but you should also be inspired by that story. Do you know what I mean?
Oh, entirely. Yeah.
Yeah.
Thanks for saying that. I think you're dead right. The whole point is, when we tell stories about great successes, firstly, we're not blind to the story, to the stocks that we bought that didn't work out. And I mean, a stock I bought for Horizon that's still in the portfolio is Open Door. And it's our biggest loser. It's my biggest loser. It's my biggest. I picked it, and it's down probably 90%. But as I said, I have six that are up over 100% and one down 90%. And ultimately, the maths of what we're doing works out. But we're not blind to the fact that there are losers. But we look at our winners because that's how we find the next intake of winners for our folio. You keep learning, you keep applying what you've learned, you keep refining it. There is no end point. Your stock portfolio is like your garden or your lawn, depending on what side of the Atlantic you're on. But you don't just buy a lawn and decide that's it, I'm done. You have to maintain it. You have to maintain your portfolio. It's like a bonsai tree. You need to prune it and preen it and look after it. But ultimately, the pleasure it will deliver and the rewards will be reaped over the long period of time.
Yeah. Okay. Yeah, let's just do a quick run through the financials before we finish up. So for Shopify, so $150 billion market cap, give or take. This is a
Yeah.
bit of a statement here, trading at about 100 times earnings, which is a
Mm.
problem.
That's well, remember what I said. One of the
Exactly.
five attributes
Yeah.
is going to be called overvalued. And by the way, 150. We're now living in the age of multi-trillion-dollar businesses. There's a couple of 3 trillion. I'm back to my Starbucks. Where's my Lucky Charms? We're back. Or 33 and a third. That's what they wanted me to say. We're back. We're in the world of $3 trillion businesses, and Shopify is a mere 150 billion.
Yeah.
It's only a young fella.
Yeah. And in fairness, like PE is, it's only recently turned profitable, so it's probably not the most accurate measure of
Ah,
valuation. But
oh, that's unreal because Starbucks had only turned profitable when I looked at it that time, and its P was like 2000 and something. It had just broken through the waterline, and when that happens, the P is just this ridiculously big number that doesn't contain value.
yeah, but it is also trading at nearly 20 times sales. So any way you
Right.
cut it, it is an expensive stock. That
Mm.
being said,
It's
it's
waltzing through a field of money,
it
giggling.
does that too, but its forward peg ratio is only at 1.5. So there is some
Okay, so not
sense
so
of
bad.
logic to it. The peg
Yeah,
will take into account growth as well. Peter Lynch always
yeah,
said a peg below one was a undervalued
cheap.
stock, I think.
Yeah, yeah, that's
Um,
right.
so if we're clutching at straws, the peg ratio is there to kind of, I guess, alleviate concerns around valuation, but it is expensive. There's no other way of looking at it. And it's expensive
Mhm.
because it's managed to compound revenue at 64% a year for the past decade. So
Yeah,
there's
wow.
that. Now, last 3 years, it's scaled to a level that you can't be $150 billion company growing at 64% a year.
Mm.
So it's looking at around 25% a year, which is still its current trajectory over 2025 as well. Returns on capital, obviously, if it's recently moved profitable, dramatically improved in recent years. So the return on invested capital is sitting at about 17% from minus 9% at the end of
Oh,
2022.
great.
Return on equity is at
Oh, did you
15%,
say it's plus 17%
plus
return on invested?
17.
Oh, that's pretty
Yeah.
good.
Return on equity is at 15% from negative 36% 2 years ago.
Nice.
And then for a company this big, insider ownership is still pretty decent as well. So Toby Luca, he owns about 6% of the business, which is worth roughly 9 billion quid. So fair play to you,
Yeah,
Toby. That's a
yeah.
profitable for going out trying to sell a couple of
Ask
snowboards.
him to
You're
be your
doing
kid's
well.
godfather. Choose a rich godfather for your
Yeah.
kids, folks. It's always makes for better presents.
And on top of this as well, so we always talk about the importance of a visionary founder and their ability to influence the business. He also controls about 40% of the voting rights, thanks to they brought in this kind of
Mm.
founder share, which is
Yeah, I remember that.
common enough.
Yeah.
A
Under
lot
Armour
of
went with that as
yeah,
well. There's
yeah.
loads of them do it. Yeah.
So that is a positive. We like Toby Luca. He's brought the business to this point, and
Mm.
his leadership is kind of a big factor in the investment thesis. So it's all good unless he starts wearing gold chains and going to UFC events. But then we might get
But he
worried.
wears tweed caps, so that's good with us on the
Yeah,
front.
he's too nerdy to be best friends with Dana
Yeah.
White now. So I don't think he's going to go down the Zuckerberg route anytime soon.
Here's lucky.
Um, yeah, so that's that's Shopify the business. I think where it goes from here is probably the next question we have to answer. What's a great answer to this, and it's a bit of a cop out, is just more of the
Mm.
same.
Mm.
It's a lovely
Well,
place for a business to be. Do you know what I mean?
well, it is. Yeah. I mean, that is it. Just do more of the same. Don't do anything. Don't do anything crazy there, lads. Just keep growing. Keep running
Yeah.
through that field.
Yeah, in terms of opportunity, I think the international growth is there. There's still so much market share to capture in the US as well in its core
Mm.
markets. And then we're looking at other routes like offline. It's processed over $100 billion offline now as well. It's in over 1,000 POS systems across 14 countries. So there's so much avenues you can go down. But again, the best answer to this question is the simplest as well. Just more of the same. And I think we're on to a long term winner, even from these levels, even when we're looking at a exorbitantly expensive stock.
Mm.
Yeah. But
It's a great name as well, Shopify. Sure, you want to have a Shopify in your folio. It sounds great, doesn't it?
yeah. So there you go. That's Shopify. I think we
Mike,
covered everything there.
very politely just ignored that. Mike's like, yeah, moving swiftly on. So yeah, but you're dead right. I think it's a great business. It was a great business when we recommended it. It was a great business long before it, and it's a great business today. So certainly, here's one that I usually do in Spotlight, a quarterly thing I do in Horizon. Would you buy Shopify today, Mike, as part of a 10 stock portfolio? And you could only buy 10 stocks.
Well, I have a bit of a grudge against Shopify because when I started at MyWallSt, it was 2019, and obviously they had all the kind of the scoreboard, the performance was there, and Shopify was top of the list.
Yeah.
And because I'm a contrary effort, I decided that you couldn't pick the one at the top because,
Yeah,
it's probably done all its growing and yada yada. I think it was up 4 or 5 fold maybe at that point. It would go on to
yeah,
go 27
yeah.
fold. So I have a bit of a grudge of the kind of the shots you don't take with Shopify. So I'd find
Mm,
it really tough if I
we
didn't
all
buy
have those.
if I didn't
Everyone
buy
has
it at
those.
20 billion. I'd
Yeah.
find it really tough to buy it at 150 billion, but I don't think I would be wrong in doing so.
It's funny, as quickly as I can recall the good decisions I made, I can recall the mistakes and the regrets I have way faster, and there's way more of them.
Yeah.
But you only need a few good ones to change everything.
They say the pain of a loss is twice as impactful as the joy of a
Pleasure of it.
win, pleasure of a
Yeah.
win. Yeah.
I've heard varying reports on that about what the multiple is. Like, is it sevenfold, whatever? But losing a €50 out of your wallet is twice as painful as finding 50. Is the pleasure of finding 50? Yeah.
Yeah.
Amen. All right. Okay, Mike. Go on. Listen, I've stuff to be doing. Don't waste my time. Don't be wasting my time here. I have to go.
Okay. And well, I was about to thank you for joining me, but on that rude one, I don't think I'll bother. But I will thank everyone else for coming on the show this week. It was
Absolutely.
another good one. And if you haven't yet, just leave us a review, whatever you're listening to us
A
on. But
5 star.
only
Yeah,
5 stars.
exactly. We only take 5 stars, and actually, your iPhone will wipe if you try and leave a 4, 3, 2, or 1. So don't even go there. We've coded, yeah, fives all the way. And actually, another ask for y'all: would you tell someone to listen to our podcast? Because the reason we do this is we want to spread the word. Send this podcast to your 5 favorite people. Tell them it's a little present, nothing expected in return, but listen to this podcast. Tell them it will change their life, and say Emmet said.
Brilliant. Okay. We'll talk to you next week.